The eminent panelists are Mr. Arif Amiri, Chief Executive Officer, Dubai International Financial Center Authority, Mr. Adib Ahmad, Managing Director, Lulu Financial Group, and Mr. T.D. Mohandas Pai, Senior Vice President, IMA, and Chairperson, Manipal Global Education Services Private Limited. The session will be chaired by Mr. Sunil Kant Punjal, President, IMA, and Chairman, Hero Corporate Services. And the concluding remarks will be delivered by Dr. Tayyab Al-Kamali, Director General, Education, Training, Development, UAE Ministry of Interior.
Thank you. May I request everyone to kindly settle down so we can start the next session. Mr. Amiri, CEO of Dubai International Financial Center Authority. Mr. Adib Ahmad, Managing Director, Lulu Financial Group. Mr. T.D. Mohandas Pai, Senior VP IMA and Chairperson Manipal Global Education Services. We are missing one of our speakers, who is Dr. Tayyab Kamali, is supposed to be in the session. Hopefully he will come back. Since we have run a little bit late in starting the session, I'm going to request us to keep this tight to be able to manage our time. This is a session on an interesting topic. Over the last many years, this country and specifically this city have positioned themselves into a super efficient financial center. There are many financial experts from around the world have come and settled down and are working here. India has an aspiration to be a global financial center. The government of India over the years has made a few announcements to turn Mumbai into a global financial center. It is therefore important that the subject of technology that is impacting our lives is looked at with particular interest around the theme of financial services. In many ways, this industry has been a leader in adopting technology. And technology now is not just coming with small incremental changes. It has begun to impact our lives in many ways, as we heard just recently, in areas such as retail, in healthcare, and very particularly in the financial sector. Whether it is the ability of machines to predict what kind of a portfolio you should invest in, or it's the ability to predict how the markets will do. Very often we have talked of machines taking up jobs. It's now beginning to look like there will also be machines replacing humans in many, many places. Only this morning there was a report of the ability of a machine. There's a new software, a new system has been developed for lip reading. An expert was able to read accurately 16% of what was being said, and the machine was able to read 50%. It makes you think a little bit about what's going on. And in the morning we were talking about the global world actually getting connected digitally. The biggest users of the digital services and connection across the world has been the financial world. So it is therefore critical that we talk about what kind of new models are required in financial innovation to ensure not just continuity of service, but also enhanced quality and capability of service. But this is one thing which certainly binds the world together. This is true globalization. The emergence of a completely new currency in the world of blockchain and bitcoins is in many ways adding a whole new dimension which was not even considered a couple of decades ago. Whether it is things like e-wallets or calculation of premium, there is a whole host of possibilities here. We have three experts with us who in their own way will run us quickly through both their experiences, and also tell us what we can expect to happen in the immediate near future to prepare us a little bit better for the new world that we face. I'm not going to introduce them. Their introductions are all with you, and they're all three well-known individuals. Only bear me to say that these are truly outstanding individuals in each of their areas who are most appropriate to be able to enlighten us on these subjects. May I first request Mr. Arif Amiri, CEO of Dubai International Financial Center, who has of course got a rich experience including in real estate in the big brands that we see around us, and he's now managing one of the more efficient financial centers in the world. Mr. Amiri.
Good afternoon, everyone. Well, it's really a pleasure for me to be here today and to be really given the opportunity to address you all and really talk about something that's really very dear to our hearts and we're very passionate about, being a DIFC representative, being part of Dubai, which is a city that is forward-looking, similar to the nation of India, which actually has a lot of technology, a lot of growth. From an economic perspective, we see a lot of things that we actually try to learn from one country to the other. I'm really excited about what we have for us going forward. To really humbly talk about, maybe I should put a bit of a backdrop with regards to the DIFC. We're a young financial center. We've been here for about 12 to 13 years. We have a common law framework and a jurisdiction that operates on the common law framework. We have over 23,000 individuals, professionals, from all across the globe. I think from a population perspective, 20% of the individuals and the professionals working in the DIFC are from India. 5% of the regulated entities or the banks or the financial institutions that are domiciled within the DIFC are from India. If you look at the balance sheet size of the banks within the DIFC, about 20% of that is from India. So India is really important for us as a financial center, as Dubai is a city and the area as a whole. So with that, we had a lot of good successes in the past 12 to 13 years. And a lot of it has been driven by doing things that we've seen elsewhere, applying it towards the DIFC, and modifying it a little bit to cater to the region that we service and the region that we service the clients we actually are poised towards, and we actually try to position within the DIFC and take care of within the DIFC. But going forward, the direction will be completely different. I mean, I think there are new words that are being used. So innovation was there, but because innovation is now at a pace that we have not seen before, now we call it disruptive innovation. So it's really a high frequency of change in technology and in terms of innovation and everything we see around us. The ability to actually connect economies and connect individuals are happening at a pace that we have not seen before. So as a financial center, we recognize that. And we recognize that, we are the number one guys to blame when we look at, things that have been done on a traditional basis, things that have not been evolving as much. But I promise you that, with the young people in the financial center, change is imminent, that we need to think that we need to do things differently to accommodate not for only today's requirements, but what's coming ahead in the future. So robo advisory, whether it's the introduction of fintech institutions that are going to impact the insurance world, the wealth management, and everything that we do in the banking platform. So we just had a interesting conversation a minute ago about startups and what does those means in terms of the way forward. And the DIFC, we believe, that contributes significantly towards the way forward. And but we also believe that accelerating the pace of these startups, especially in the financial domain and financial sector, is so important. So we've initiated and introduced the Fintech Hive at the DIFC, and the whole purpose of the Fintech Hive is to address the needs of the community, the people, as customers, and the needs of the institution to facilitate the customer requirements, and to bring them down here in the DIFC to work at concepts and solutions that will, take our financial services, our engagement with our clients a little better, and and ensure that we actually elevate the proposition. So that's really important. And with that, with the short announcement that happened maybe 2 months back, by now we received over 215 applications from across the region and the wider region, to be honest with you. So that just shows you the potential of actually the need and the potential of people to really participate in such an initiative. We really forecast that with this, there will be a room for also additional flow of investment. Because if you look at simple things, when we talk about financial technology and the players in financial technology, there's really we need three things. One thing is ability to secure talent and retain talent, ability to have regulation that enables them to do business and expand the servicing, because once you over-regulate something, it will just never go, it will never progress. So these are two things, so talent, regulation, and one of the most important things, the availability of funding and investment within the specific sector. So within the DIFC, through the FinTech Hive, we've actually collaborated with regional and international banks to actually endorse the solutions that are going to come out of this accelerator and accordingly endorse the entities. And with that, there will be investment in terms of users and investment into also the entities that are going to be there. So that would stimulate growth. Also, if we look at it from a UAE perspective, I've been handed a report from one of our good friends who's actually sitting just across there in the room that talks about how the region has been doing quite well in terms of, there has been some movement in terms of the fintech space and technology space. If you look at the first hub, which was probably going to be like the UAE, Jordan, Lebanon, Egypt, they've been leading the MENA region when it comes to technology. But if you look at UAE per se, 60% CAGR growth in the past 5 years or 4 years. So it represents the number of institutions that have been actually coming and doing fintech business out, or technology and fintech business out of the UAE has been actually growing at a fast pace. But that doesn't resemble the opportunity that's really out there. So that's really good. And then we're just talking about this as well. When we look at the Western economies and we look at the what they so-called developed economies, technology, innovation, and disruptive technology is maybe a way for them to do better, efficient business, maybe
contribute towards growth as well. But the way we look at it here, you look at inclusion element, you look at that nearly about 80% of the wider region is really unbanked to start with. So that tells you there is so much potential in the market to be there. So really opening new markets, servicing needs of existing people and population, it's a massive opportunity that will not only increase your economy by 10% or 20%, but can go far beyond that. So really there is a real need. And secondly, when we look at the backbone of any economy is the SMEs. So with SMEs being about, and people will say about 80% of any economy is really dependent on SMEs and how they flourish within any economy. And we look at the amount of financing that is available within the region, or within the region we operate in towards this sector, it's about 50% of the average of the rest of the economy of the world. So with technology, with innovation, all of these issues can be addressed. And we really believe that the connectivity we have with India, especially when it comes to technology, when it comes to the professionals that represents various industries, whether it's retail, hospitality, finance, and beyond, there's so much that we can collaborate on. I think with young people, with the ambitions that we actually have going forward, the similarities in terms of cultures and connection, Mumbai is about 2 hours flight away, so it's closer probably from getting from Mumbai to Delhi. I don't know if that's right, but I think we're close there. So there's so much potential, and I think as a financial center we embrace this, and we actually look forward to a future that will stimulate more innovation, and we look to actually have it in-house within the DIFC. I look forward to having more questions from you and a great interactions as the session goes along. Thank you so much.
Thank you. May I now request Mr. Adib Ahmed, Managing Director of Lulu Financial Services.
Good afternoon to all. Respected panel chair, Mr. Sunil Munjal Sahab, fellow speakers, Mr. T.V. Mohandas Pai, Mr. Arif Amiri, distinguished guest, A very good afternoon to you all. First of all, thank you for inviting me for this IMA Second Indian UAE Conference. I would like to congratulate the IMA for completing its 60th wonderful year and to be an apex body of the professional management. Getting on to our topic today, let me begin by saying that for all the different areas of expertise that our distinguished speakers represent here, I believe that we share the same ambition to see a globally competitive financial sector, tapping into the various opportunities presented by fintech and digital innovations. Ladies and gentlemen, we live in a day and age where disruptive technologies have become the new normal. To remain competitive, it has become an essential to continuously innovate and evolve, where each day passing by, we represent with a new technology that drives us to the future. Disruption is represented today even by disruptors that are being disrupted. A breakthrough technology today could soon be yesterday's news. With so many options to choose from, it is extremely hard to methodically scan and access, pilot, and deploy new technologies. But it's essential to try them. By continuously monitoring what's new and evaluating the potential benefits, only those companies that acknowledge the impact of such disruptive technology will be successful to navigate this new revolution. We are yet to fully accept and grow influence of fintech in many industries. The impact of disruptive technologies on an organization can be multifactored. It allows us to diversify our investments requirement, break the traditional boundaries of our industry, as well as positively impact our businesses. In short, by using the disruptive technologies, we are improving our products and services, thus reducing cost and outpacing competition. Fintech, taking the case of the industry that I'm part of today, I believe that fintech has a potential to transform the way that the financial services are delivered today, designed as well as underlying the process of payment, clearing, and settlement. The past few years have been an explosion of new digitally enabled financial products and services in addition to new processes and platforms. Innovations like Bitcoin and cryptocurrencies have already started gaining popularity. However, there seems to be many issues on acceptance, but I feel that there would be a future to all these new innovations. While fintech plays an important part on one hand, the regulatory technology also is a large growing factor in today's field. While a large population can benefit from the access of fintech services, there are hundreds of legislations, jurisdictions, and regulatory across the globe that make it difficult for companies to navigate the requirements. This brings us to the most important disruptor of all, which is going to be the RegTech. Not only does RegTech seek to address the multiplying complex obligations in a cost-effective manner that secures access to data combined with cutting-edge technology that helps to facilitate innovation for fintech products and services. Just as smartphones revolutionized the way that we have interacted with one another to communicate and share information, fintech may also impact nearly every aspect on how we interact with each other financially, from a payments and credit to savings to financial planning, in a continuously connected, on-demand world where consumers, businesses, and financial institutions are all eager to find a new way to engage in financial transactions that are more conveniently, timely, secure, and efficient. India and UAE, both in particularly, have a great role in this upcoming tech revolution. Through the inspirations and visions of His Highness Sheikh Mohammed bin Rashid Al Maktoum, the UAE Vice President, and Prime Minister, the ruler of Dubai, UAE has become a top nation at the helm of digital innovation. UAE has been pioneering smart solutions across all areas, including governance, business, and a host of many other services. In UAE, with a rising population and increasing affluence of personal financial transactions via e-payment and smartphones are expected to increase 70% by the year 2020. Recently, both the Abu Dhabi Global Markets has announced plan of making Abu Dhabi the capital of financial technology, taking into consideration how rapidly the fintech is influencing the global market. Similarly, the DIFC, the financial hub of Middle East and Africa South Asia region, has announced the region's first fintech accelerator in Dubai last year. These developments have already begun revolutionizing the financial service industry by offering new ways of unlocking revolutions in the fintech industry. These advancements in innovations and technology deliver greater happiness and ease to all the citizens that supports the UAE vision of 2021. This being on one hand, the Indian scenario is also not far behind. India too has a resurgence of digital payment recently. The Indian government has been promoting digital finance for some time. Earlier this year, the Reserve Bank of India launching the United Payment Interface, a tool that allows the users to access multiple bank accounts and merchant payments with a single mobile app. The government is keen on transaction to a cashless economy. This is a huge revolution step that India has taken. Along with it, the Indian tech resurgence is flourishing. India has been a place where low-cost services and solutions have driven the technology market, while at the same time encouraged the out-of-box thinking innovations. Moreover, India has also granted a few slew of new banking licenses to promote the competitive of expansion and faster development of new digital services. To conclude, I believe that there is no firm is behind on accepting that the technology will drive their business in the future. Therefore, it is essential that these institutions have a strategy to harness the powerful advancement of the new fintech revolution. The battle to gain supremacy is in the race that is already underway. While financial innovations hold promises, it is crucial that the financial firms, customers, regulators, and other stakeholders understand and mitigate the associated risk. There is a tension between the lightning pace of development of new products and services being brought to the market on a daily note, sometimes by the traditional financial services firms, and the duty to ensure that the important risk around the financial services and payments are addressed. We currently live in a world where 85% of transactions are still made in cash. But the convenience and the digitalization will eventually enable us to move slowly away from physical need of cash. Fintechs will have an ability to rewrite the economic development of nations worldwide. The end result will be an improved quality of life. In an age where we continuously technologically innovate distinct the future of our businesses, we no longer have the luxury of relying on conventional business methods. To survive, one's need to constantly disrupt their business to change, to reinvent, and to get better. For all, I believe that either you disrupt or be disrupted. Thank you very much.
Thank you, Adeeb. Thank you, Adeeb. You raised an interesting point about which has probably pushed India or advanced India's push by 10 years or so into the digital age as far as payments are concerned. Not just the front end, but also the back end. Mohan, can I request you, I don't know if you're planning to, but could you cover some of this as well as you address us? Thank you. Mohan Das Pai.
Dignitaries, ladies and gentlemen, every day $5 trillion of currency is traded around the world, 24/7. Currency goes round and round and round when you're sleeping. But in the time you wake up and the time you sleep, the values have changed. More than 50% of trading in the stock markets globally is by algo trading, the machine trades, preset. A very big bank in New York replaced 150 investment bankers with an algorithm. So they hired 15 people to write that beautiful algorithm, and 150 bankers who are paid $200,000 each gone. Banks are shrinking their places of business and branches are becoming smaller because entire banking is getting automated. Startups in remittance have come up in London, creating local pools of capital, which is being transferred all over at a very low cost. Cloud technology is reducing the cost of data centers in a very, very significant way, allowing almost unlimited capacity in terms of data and ability to manage big data. The communication networks have exploded all over the world so that you can communicate instantaneously. Financial apps, mobile banking is now disrupting, and I'll explain to you why. Artificial intelligence is developing the ability to do predictive analysis and, along with machine learning, give you products which took years and years of training for human beings to do. Lending, which was a very nice business because bankers paid 3% on deposits, charged 6% in the US, and earned a 3% spread and went home at 3 o'clock. And much money was dumb money because you put money in the bank and the bank remained there, and maybe many of us were very lazy. Now, on the liability side of the balance sheet, the deposit that you put is getting, attacked by many startups to give you investment products. By using mobile banking, you can create a portfolio of deposits in various banks, and you can trade and you can shift. On the lending side, you need to access risk. So there are algorithms which take up the risk analysis, getting various points of data from your credit card, from your salary slip, from your taxes and everything else, and create a credit profile. There's a startup in India called Fairsend, which does peer-to-peer lending, where we have an investment. They take about 500 points of data, and if you apply, they tell you all your background and give you a credit score. And say, for this credit score, you can do peer-to-peer lending at this cost. And the cost depends on what you are, and the data is captured from the system. Investing is again getting disrupted because the investment ETFs are coming up in a very big way, and ETFs are tracking the indices, and ETFs are also doing weighted investment and doing away with the need for advice. Trading is automated, we know that. Transaction costs have come down, and the banks own the payment system, right? The payment system is where the banks interact between each other, and for international remittances, you require the SWIFT platform. But recently, ICICI Bank and NDB did a blockchain transaction on Finacle. In a blockchain transaction, the entire ledger is transferred. Very good, great technology at an incredibly low cost without anybody being able to hack in or to disrupt. Money transfers on mobile are becoming very, very simple. And the biggest heresy, the concept of money itself is under attack with bitcoins and cryptocurrency. And the Bitcoin is trading $1,200. I don't know what it's trading because a limited number of Bitcoins can be created by mining. And mining has become more sophisticated and requires huge computing capacity. And that means the currency value keeps going up because it is limited. It may take away the power of the central banks to go on printing currency and flood the market. We know that $10 trillion of surplus liquidity is there in the global markets, creating interest rates which are negative in Japan, in Switzerland, and in Germany. So digital intermediation and robo-finance is coming up in a big way. To give you an example, if I want a housing loan, I go to my robo and tell the robo I want a housing loan for $500,000 for 30 years, and I'm willing to pay X amount of money as interest. And this app will go and talk to all the companies which are there on the web and negotiate with them and give you the risk background and do everything else and come back in half an hour and tell you, I've negotiated, this is the price that you can get. Just put it there and your robo-finance works for you. Is it real? It's happening. It is a very small way. So, fintech innovation has become critical for the development of global capital flows and innovation. And in India, a very big development has taken place called the India Stack. What is the India Stack? Developed by volunteers led by Nanda Nilekani. First is Aadhaar. 1.1 billion Indians have got a number. And the number is biometric with 9 different data points and stored in one of the largest, let's say, collection of data in the world. So Aadhaar gives you a number. Then you got UPI, Universal Payment Interface. What does it do? On your mobile, you put in the number of somebody like Mr. Shetty and say, I want to transfer $1 million. I don't have $1 million, but let's about. And just click. The $1 million gets transferred to his account. I don't know his account, but I know his number. And it transferred instantaneously, no cost. No cost. It sits on technology. The apps are all written, and you have the APIs with all the core banking, and it goes instantaneously, and it works. People are transferring money. And then you have the eKYC. KYC is the problem. So entire KYC is automated, sits the central ledger, and so you want to go somewhere, you just send them that ledger where it sits, and you get all the details in the background, and you can search and get more data points if you want. You have a DigiLocker. DigiLocker is where you keep all the electronic transactions of your banking. We know what a mess financial transactions are because we got paper, we got all the nice stuff. I mean, anything electronic, I have a DigiLocker where I put all my information, everything is there, and if I run a program, it collates, gives you portfolio valuation whenever you want, or you can track it, and it's stored securely under your signature or whatever it is. E-sign, how do I sign? Electronic signature, free of cost. E-privacy. Now, privacy is a big thing. That's why blockchain is required, because the ledger is with the banks. And the banks control your transaction, they reserve it. With blockchain, I allow the bank to use the ledger. And when I make a transaction, the entire ledger goes to the other bank too. So I control it. So I have got privacy. So with the e-privacy layer, I can give access to anybody who wants my data at my behest. That means I control the data that can be given. All this has been created in India free. This costs billions of dollars. The entire Indian banking system was put on core banking at a cost of $4 billion over 5 years. And Citibank spends $4 billion every year on tech. So technology is changing the way the financial services industry is going on. And like Sunil said, demonetization was a very revolutionary step. I don't know what Prime Minister Modi had in mind when he did it, but he did it. It's a very bold move. In maybe 45 days, 60 days, system almost came back to normal. So 15.44 lakh crores, that is something like $250 billion of currency was gone as legal tender at 12 o'clock on November the 8th. He announced that November the 8th, 8 o'clock and 12 o'clock is gone. Of course, some of the jewelers kept it all open, the cash came, they gave them jewelry, and all the names are all available. So time was given till December 31st to put money in the bank. And I think barring 1 lakh crore or something, most of the money has come back. A lot of people have put 30 lakhs, 40 lakhs, 1 crore, 5 crores. It had an impact on women. There must have been 1 crore of women who had kept cash away for 30, 40 years, kept in the saris and hidden. And suddenly they found this 500,000 rupee notes will have not value. The husbands knew where the money is. The women are angry with Modi. In every house there was this money kept idle. Because what is money? Money is a medium of exchange, a unit of accounting, a store of value. I think about 4 to 5 lakh crores of black money was stored in cash. And most of it is gone back in Benami names otherwise in the banking system. And a friend of mine called Dr. Pulak Ghosh, India's foremost big data analyst, worked with Niti Aayog, and he's got all the data of all the people who put money wherever in a database, and they found out patterns, and they're sending notices to them. And the Prime Minister has told people, all the names are there, he's sending them love letters. Aapka paisa hai idhar, aap come and tell us what the money is. If your money is there and you don't reply, let us know if you paid your tax. And if you're not paid the tax, please pay the tax. And if you don't pay the tax, the money you can't withdraw anyway because it's blocked, and I'll take it away. So all this money, 4 lakh crores is gone. There'll be some washing, all kind of things will happen, but it's coming clean. And with that, digital transaction taken off because a digital footprint is being created for people. A digital footprint is data available on the web for everybody to monitor, those who got access. And the government has now got this huge tax base of all the people. Another thing has happened, Sunil. If you look at various parts of the country, the south was not very impacted because the south is doing much of the transactions, cash transactions are very less, right? Calcutta was very, very impacted because a lot of the Calcutta transactions are in cash. And in the place called Malda, the quota note industry has been very, very strong. Somebody used to print notes and distribute it from that place in Calcutta. It happened in Calcutta, in the Malda, it happens in the Nepal border, it happens in the Rajasthan border. They're all being tracked because data is available, what is happening, right? And then we saw Western India was okay, North India, Delhi and UP was bothered because North India, a lot of cash transactions, real estates were being washed. Many of them were not genuine because everybody used a check, but we know whose money is there. The politicians one party put 100 crores of cash in UP, in banks, and they've been tracked, right? So we knew from data points where the cash was, where the cash went, which RBI never knew. Now RBI is taking time to come out with a full score because they have to count 4,500 currency checks all over, and they don't want to make a mistake how much has come in. Because they're very scared that if they make the mistake, they have to pay the money to the government as a dividend. Because currency is a banknote, a bill of exchange given by the bank. I promise to pay the bearer the sum of so-and-so. What is the sum of so-and-so? You take a currency, go to the central bank, they'll give you 1 rupee note, 1 rupee coins, because the 1 rupee coins are the notes, are legal tender under the law. And the rest of it is currency, a bill of exchange. So you go and you can do that. So this whole demonetization has created a new wave of people becoming digital, and I think things are going to happen in India in a very, very big way. The informal economy, which dealt with cash, was 48% of GDP in India. It could come down. Not everything is black money, it's cash. So black money generation in India, in my estimate, cannot be more than 10, 11 lakh crores a year, about $150 billion. Much of it invested in real estate and some other areas which we know. So I think that's one more thing. Now, let me come to these 3 questions that we have to answer, which Rekha asked. How can India and UAE remain leaders in the new world of financial innovation? Now, if you want to be a global financial center, what do you need? You need talent. London has the biggest collection of talent in the world. You need institutions, because institutions hold assets and they trade, and you need them credible institutions. And third, you need good, let us say, regulations. Light touch regulations which enable you to start business, close business, settle business and all that. And London has got that in a very, very big way. You need liquidity, pools of capital being there. The total deposits in London is 4 times the GDP of the United Kingdom. And then you need, investors and a nice tax regime. The tax regime is pretty bad, except that if you're in the UK and you have money outside, the foreign money is not taxed in the UK. And then you need technology. And London has got good technology built over the years. And because of all this, and then of course communication and travel. London Airport, Heathrow, everything, so people can come, travel, is very well connected around the world. Good quality of life. You've got the theater in Soho, you've got all the nice dining restaurants and all kind of beautiful things, so quality of life goes up for all those high-paying people to pay. All these are required. As New York has become not a global center like London, it's a very large US center, a little bit to be global. Frankfurt is, nothing else is there. Dubai is coming up, got good infrastructure. You need more people, you need more technology, you're trying your best. Mumbai has got people, great technology, but regulations suck there because we don't have capital convertibility. And who needs capital convertibility in the Hawala market works? I once met the RBI governor in Mumbai, Sunil. I went to meet Dr. Jalan and told him I want $10 billion to acquire globally. He fell off, he said, $10 billion. I said, why? He told me, look, 10 billion, I got UP and BR to think of, how can I give you $10 billion? This was about 15 years ago. Then I told him, look, you can't control this market. I said, look at the guy down there from the 17th floor, the corner. Give him $1 million and he'll transfer it to Dubai or transfer to New York in 15 minutes. What are you talking about? You control the banks. But India doesn't have capital convertibility, and we have a big problem, but we got many things else. So, to remain leaders, India and UAE can come together. UAE has got capital convertibility, it's got a good quality of life, it's got fantastic connectivity around the world, it's got good modern regulations, and is not scared of changing regulations because the local market is small and you cannot contaminate the local market. India has got a larger local market, it has got great talent, bad regulations because of the fear of capital account convertibility, and it is a little bit behind the curve in terms of its ability to do that, but great technology. So I think if we combine both, we get something. What role can fintech play? Let me give you some data. India has $115 billion of software exports. Street value is $200 billion a year. 4 million people employed. 25% of this is financial services. All the major banks get the software done from India, settlement is done from India, data is tracked from India, and these Indians, 1 million people, support the entire global financial system. In terms of fintech, there should be 3,000, 4,000 companies doing fintech. So India is a cutting edge of technology, 2.5 hours. Bangalore is just 3.5 hours. Bombay has got a little bit of fintech, but Bangalore has got most of it. It's 3.5 hours from here, and it is portable because it can shift. So to make both places competitive, we need to get the startups and innovation to come up and to showcase and expose them to the market, and maybe the India stack is something that Dubai should look at. How can policy and regulations be made fintech friendly? Are Dubai and Mumbai ready for disruptive change? Mumbai is ready for disruptive change in technology, it's happening in a big way, and India is going to lead. Is not ready for disruptive change in regulations, except the gift city has come up and they're trying to create an offshore market driven by Modi in Ahmedabad. Ahmedabad is a little bit difficult place. You can't have a beer in the afternoon, and entertainment is a little bit less, and the talent is just not there. But that's a small thing, right? It's a very small thing to do. And the flights are not there, and water, and there are some problems there. And Gandhiji's ashram is there, and there's a big problem. You can't go pray 2 times a day. But Mumbai is right next door and is close by. And once you have this fast train, maybe in 10 years' time, where you can travel in 1.5 hours, it's like going from a suburb in Mumbai to Dalal Street, right? So you can go, stay in Ahmedabad and come here, and that could work. Dubai has the ability to have great regulations, state-of-the-art, no earlier ones, but it needs more institutions to come. It has to create more innovation capacity. It has to create more fund managers. It has to get more funds to come up to size. And if you look at Singapore, Singapore is doing that, but Singapore is a place which takes care of the whole of Asia. Hong Kong is going back a bit way because China is dominating, and Shanghai, well, they got a lot of money, but nobody from outside wants to come and do that because the markets go up and down so violently, because all housewives trade when the whole market goes up. So I just want to end by saying, in the next 10 years, we're going to see more change in financial services than in the last 50 years. It's already happening in the US, it's happening here, and it's going to be driven by the mobile. The mobile is going to be the device to run banking, because on the mobile, you can interact, you can do transactions, you can transfer money, you can get loans, you get information, you get everything, and all the apps are already there on the mobile. So you don't have to go to a bank, you don't have to see a banker, you can do video conferencing, and he can get all the information from you because everything is available on the web. And today, out of 7 billion people in the planet, 6 billion people have mobiles, 3.5 billion have got smartphones. And in the next maybe 5 years, maybe 6 billion will get smartphones. And today with Reliance Jio coming with a 2,000 rupee smartphone and a 100 rupee data plan, giving you 20, 30 GB, you can connect to wherever you want and all around the world. And once people are connected around the world, they can get credit in small amounts, they can do transactions, they can get insurance, they can get everything else, and wonderful things are going to happen. So we are in the midst of change, and we have to drive the change. And how do we drive the change? By becoming the centers of innovation. To become the centers of innovation, we must get bright young people who don't have memory of how banking was. Most of us have got memory of banking because our parents took us as children, opened an account, we had something called a passbook. We used to see the entries there. Some of the handwriting was not very good, and they used to give us some money. We should write a slip to withdraw money, a slip to put in money, and all kind of nice stuff. Our mind is all crammed with a lot of stuff which should not be there. You've got to think of banking de novo. Reimagine banking, reimagine financial services, put it onto tech, and that is what this generation is doing. They have no knowledge of all that because they've not seen a rotary telephone. They grew up with a mobile in their hands and an iPad when they were 2 years old or something. And once that comes, get them, and India is the hot spot, the second largest in the world. Get them, Dubai, India should work together, get these young people, connect together, become an offshore, sign up, and we can recreate this world. Thank you very much.
Thank you, Mohan. Let me thank all the 3 panelists for helping us bring this back in time. Ladies and gentlemen, we have a few minutes. We can take some questions from the audience. There are mics around. If anybody has a question, kindly raise your hand, and we will try and get a mic to you. So if there are no mics, either nobody understood what was being said or everything was said extremely well. I can only assume one of the two. So let me ask a question. Interestingly, 3 of you raised different perspectives of the financial world. It is a fact, as Mohan, you were saying just now, it's not just one aspect. It's right from wealth management, advisory, investment banking, core banking, payment gateways, payment systems, conventional banking, all of these will get not just impacted, they will get disrupted with new technologies that are coming in. The early signs are all there. What is the preparation that the industry is making to get ahead of this change or not get rolled over? Can I ask the two of you first to try and respond to this?
Well, thank you so much for this question. I mean, I can relate to, I can probably talk about the FinTech Hive at the DIFC. Number one, if you look at the advisory board that we actually have, there's a representation of regional and global banks that sit on the advisory board of the FinTech Hive. And that allows them the ability to actually examine and experience all the new solutions that are out there that are going to disrupt the industry. So whether you're an asset manager or a bank, you actually have access to the solutions that are out there firsthand, and you'll be able to actually decide the solution works for me or not, or whichever the one you want to carry forward. So really, there are such instruments around the world, such platforms around the world that encourages engagement between the solution providers or the people who are actually going to provide disruptive technologies within these industries and the well-developed global brand, regional brands of the world that are there in the finance world. So that platform is there.
Adib, would you like to take that as well?
So my viewpoint on disruption, whether it's on fintech space or on retail space, is slightly different to this. While we all say that innovations and disruptions are good, but lately in last 5 or 6 years, what we have understood is that the non-traditional disruptors comes in and disrupt an industry that has been working for decades. And end of the day, the disrupted technology starts to lose money. The disruptors don't start to make money also. And overall, in the economical outlay, you find there is a lot of cash flow. So while we are all in a good spirit of wanting to be disrupted and wanting to move to the technology, I think so we should take it more cautiously. Also, to find out the impact of these innovative technology and how that would impact the regulatory framework, also the economy, and how these would lead to. And I think even the culture of the new startups should also be well groomed, so that there is an end results and a net business sense would be also made out of it.
Thank you. Mohan, you raised two interesting issues, and I want to take that up with you. One was about the young, who come into this without any legacy. I can tell you at home, I have 2 young grandchildren. Their ability to program any electronic gadget is far superior to my wife's or mine. Certainly. I mean, it's like a self-evident truth for them. So, how do you ensure that the young are getting in and leading this change that is taking place in the world? And it's not just that they're being driven to this. And the second question is slightly different. You said all of this has been done free, and it has, the India Stack, etc. But as we know, to sustain anything in a business-like fashion in the long term and to ensure there's reinvestment going back into innovation, you need both arbitrage and you need a margin. How do you sustain this growth?
Let me address the first question about young people. I think the young people require capital. It's a truism that, people past 40 have the money, and people around 20, 25 have the talent and no money, right? So we've got to give them a little bit of money, and people like you have to invest more and do something, small things, and give them a little bit of pocket money to trade and all that. But I think they're picking up because they're coming into a world which is very different from the world that we probably inherited. Because they're all on mobile banking, and the mobile of the last 5 years has changed everything, Sunil. So we don't have to worry with that because they're exposed to it in a very significant way. Just today there's a hackathon in Jaipur. 500 people have come in Jaipur. Who ever heard of Jaipur and a hackathon? So I was just tweeting on that. So the young are taking care. The key thing is how do you connect them globally so they become part of the global community? I was telling to Mr. Amiri that the young people in the Emiratis here and in India should get connected together. So talk to each other, understand each other, create a network. The network impact is fantastic. Facebook is the largest country in the world. It's a network impact. And Tesco, as a retailer with large customers, is becoming a bank. So today, those people who own the customer become institutions and banks. So Facebook may become a bank later because they own that. and Tesco's and all retail, Walmart may become a bank, Amazon may become a bank, because they own customers. Once you own customers, you can transact. Customer acquisition is the most important thing. And second, as far as giving free, it has been created free with great tech, with proper documentation. A community of startups have come up using this freeware. Is like Unix in those old days, and like other languages which are available now, but they're getting institutionalized. So we've got the NCPI, National NPCI, National Payment Corporation, which has taken UPI and is holding it, and now they're investing to make that happen. DigiLocker and everything is getting in a very big way. And he spoke also about institution. I want to make a point. The chairman of State Bank of India has said they're really mortally scared of what fintech disruption is going to do, and they're doing many things. They have 500 million accounts. 500 million accounts, okay? HDFC has got a fantastic app. They look at a transaction for the last 5 years and see all the credits and the debits and no check returns, and then send a mail to you, here is 1 million rupees of loan unsecured. Oh man, you data mine, you can give all your best customers, because customers with you are the best customers. You got their track record. NSE at the stock exchange, 45% algorithmic trading. They got the capacity to do settlement T+1 basis, a extraordinary amount of technology. Even BSE has got that. If you look at all the players, they're in the midst of it. And the disruptors are now come up, like a tone tag, which does a payment by a sound. For example, all POS machines all over are analog machines, they're not digital. If you want to make them digital, you have a problem. But they utter a sound which is ultrasonic, primarily because it is for people who are disabled, right? So you have a feature phone, and you just bring it to 1 meter, and they connect, encrypted data goes out, and the transaction takes place. It is available to 50 million people in India. So all this is happening, they're proliferating.
Absolutely, and you're right about the bank. And incidentally, the chairman of the State Bank is a chairwoman. Yeah. Yes, Gary. Can we get a mic back there, please?
My name is Gary Wabi. My question is to Mr. Mohandas Pai. You said the software industry today is $115 billion in India. With all this technology and all these disruptions, what do you think in the next 5 years the IT business in India will be, value-wise?
Look, I know all these fears. The fears are, in my view, not very much baseless, barring a few things. And the reason is very clear. The legacy software in the world is $2 trillion. All the $2 trillion of legacy software. All the major institutions of the world have multiple databases, much legacy. COBOL is still 40% of world software. COBOL. Fortran maybe 5%. Unix is still a major part of the software. Because, they have legacy. They have acquired companies. They've not been able to integrate. They're building on top of it. So there'll be always work. Work will flow from the US and Europe to countries like India for the next 5 to 7 years. But India will lead the disruption in AI and ML and automation, digitization, to make it happen very much faster. Where the globe has become so interconnected. And today, there is nobody in the world who knows COBOL to upgrade all that except some people in India. And they're becoming more scarce, and they're getting more and more money. So I think, this will even out. It's going to take some time. It's not going to happen here for large institutions. At the customer interface, this thing is extraordinary, change extraordinary. On the database level, at the basic level, it takes time, because you can't change anything. Something may go wrong. If the whole thing collapses, who is going to do? I met the CIO of a major American bank who spends $4 billion some time ago, and I told him, what about getting web-based technology throughout? He said, not on my watch. I'm here 3 years. I'll come and spend projects, the customer layer, change everything. Goodbye. Somebody's problem.
Yeah, you're right. Actually, if you think back a little bit, this is what was also happening in the automotive industry. Because there is sunk cost of billions and billions of dollars in the conventional technology, there was a natural resistance to new technologies coming into the industry. So which is why it was actually people outside the industry who brought the big innovation and disruption, even in the automotive industry. And now the automotive industry is scrambling to catch up. I suspect some of this is going to be the same also in this industry. In some ways, it's already begun. The telecom industries are becoming the new banks, as you said. And the telecom industries are becoming the new retailers. So the industry itself has no choice but to change, which is why I was asking this question of Mr. Amiri and of Adeep earlier. That what are you and your industry doing to not just prepare for this onslaught, but to become a key player yourself? to actually drive the change, not just to get blown away. Because that would be a shame, because these are large, well-established institutions with lots of talent in there. Can we reconfigure the talent to adapt to the new ways of the world?
Like Infosys also in DIF3.
Correct.
You know, they've been there for 8 years, so you just got access to the best talent in the world.
Drive the industry forward is all about understanding that technology is not really, people said technology is a luxury at one point of time. Then they said technology is a necessity. Going forward, technology is the way we do business, the way organization develop. So it's no longer something that, you know, we call it a luxury or a necessity. No, it's really the way,
Survival.
it's survival. And I think you look at various institutions, again, if I don't want to go back to the example, but there has been recognition in that. And therefore, you see regional institutions, global institutions want to engage and take part. They want to adapt to change. They want to embrace innovation to ensure that their business actually continues, that they're exposed to the technology that's out there, to service their clients and ensure that they're on par with what the community wants. So that's definitely there. From a DIMC perspective as well, one of the gentlemen who actually have the organization, he's from India, and he's so thrilled that he's got to accept strategy. His whole background is digitization. And we're going to be adapting all of that the organization to address all our clients' needs and within the institution. Blockchain is something we are really driving forward. So there is a digitization of the angle as well, but there's a blockchain solution that we're adapting to facilitate the registry services and other services that we have with the IFC. So it's something we're driving forward and we're really serious.
Mr. Ali, here is an offer for you. Please set up a India Stack Technology Lab in Dubai, DIFC. So this is fantastic technology. And using this, you can discuss banking. I don't know, gentlemen, and get access with you, but you discuss banking in the Middle East and in Africa. Africa will leapfrog the latest technology because there's not much there as it is, where you can do banking on the mobile, apart from the M-Pesa, much better than M-Pesa and all that. And you can change, and you will spread to Russia and spread anywhere. I haven't done it in India, except my regulations don't allow me to go outside. You don't have any constraint. And we will get the whole technique here to set up the lab, and then you can ask all your startups to use this India Stack to build apps on top of that, and do that.
My question is to Mr. Mohandas. As you are saying that globalization, everybody is seeing the footprint of globalization. But still, what we see that the currency for international trade is still monopolized by the dollar. What do you think next 5 years, this Bitcoin or cryptocurrency, could this be a substitute in next 5 years? Do you see any change?
No, it's too small, it's very esoteric, only for a few people. See, you need faith. Understand currency, everybody's got a green piece of paper, very valuable. And then it's printed somewhere around, nobody knows, but you know, you can sell it, right? And that's a fantastic thing. So even the British pound had the same thing before the First World War, right? That's fantastic, global currency. Now with the dollar. And maybe China is coming out, but you're not sure what you want. So it will take another 20, 30 years or something to come out. But it will take more time.
So thank you. Thank you. Let me wrap up this session. I just got a message that Dr. Tayyab Kamali is being held up with His Excellency of inaugurating some green power plant in the middle of the desert. He's not able to come back. I want to thank all of you for spending the day with us. I want to thank all the speakers, all the sponsors and supporters who's helped with the conference today, all those who organized it, our team at All India Management Association, who's worked tirelessly for many months to make this work. And thank you, Mr. Soni, for hosting lunch for all of us. And ladies and gentlemen, we will see you next year. Thank you. Bye-bye.